an example of provisional tax. So let's look at the information. Tini is 52 years old, so that immediately must signal to you that the special rebates for people 65 years and older does not apply to her. And she's married to Toby, and both their children are full-time university students. So full-time university students can qualify for the medical tax rebates or tax credits because they're full-time university students. And Tini supplies you with the following information that happened on the dates as indicated. On 31 January 2022, she submitted her 2021 year of assessments income tax return, and it was assessed on that date. And the ITA 34 assessment shows that there was a taxable income of 1,050,732 Rand. The pay as you earn that was on that assessment was 307,808 Rand, and provisional tax credits, or the current assessment before the provisional tax credit, was 30,789 Rand, owing to SARS, then less the provisional tax credits of 9,000 would have left you with 21,789 Rand, owing to SARS. Alright, then the 31st of August, so this must immediately signal to you that this is the first provisional tax payment that must be estimated and paid on or before that date, 31 August 2022. And the estimated taxable income was then 1.1 million Rand, and this relates to the February 2023 tax year. And the employees' tax from 1 March 22 to 31 August 22 was 125,783 Rand. But let's go back to the 31st of January. So there it was assessed, the 2021 tax year. So that is more than 14, or at least 14 days before this first provisional tax payment of 31 August 2022. So the 2021 tax year's assessment figures can be used to calculate the first provisional tax payment on 31 August 2022, instead of using the estimated taxable income of 1.1 million Rand. Then let's go on 30 September 2022, the actual taxable income for 2022 was estimated at 989,552 Rand. And on 31 January 2023, the income tax return for the 2022 year was submitted and assessed on 17 February 2023. And the assessment showed that the taxable income was 989,552 Rand. The pay as you earn was 272,529 Rand, and the provisional tax credits 10,944 Rand. So it was assessed on 17 February, which shows you that this was not more, or not at least 14 days before the 28th of February 2023, which is the second provisional tax payment for the February 2023 tax year. So that can't be used because it's not old enough. It's not at least 14 days before 28th February 2023. So if we go to 28th February 2023, it shows you the estimated taxable income is 1,108,638 Rand. The employees' tax for the 2023 tax year is 263,659 Rand. And the medical fund contributions, they started, or Tini started contributing to a medical aid fund from January and February also. It was 10,889 Rand per month for herself, her husband and 2 children. And there was a taxable capital gain of 118,459 on the sale of shares on 31 January 2023, which is included in the estimated taxable income. So, if we look at the assessment that was of the 2022 tax year, in the first place it was assessed 17 February 2023, which is not at least 14 days before 28 February 2023, the second provisional tax payment date. And it's also less than R1 million. But now Tini's estimate is more than R1 million, and we know that if a taxpayer's taxable income is estimated at more than R1 million, the actual taxable income estimated figures must be used. So for the second payment, we will be using the 1,108,638 Rand estimate, including that capital gain of 118,459 Rand. So then we move on to 31 August 2023. There the estimated taxable income is 1.1,752 Rand. And the employee's tax from 1 March 23 to 31 August 23 was 299,562 Rand. But we know these figures don't make any difference here. It's irrelevant because the second provisional tax payment has already been made by this stage, and the employee's tax from March 23 to August 23 relates to the February 2024 year assessment, so can't use these figures. And then on the 30th of September 2023, the actual taxable income for the 2023 year was 1,356,553 Rand. So that must immediately also ring a bell, because the 30th of September is the third provisional tax payment date, which is voluntary, so you can make it if you want or not. That's in order to avoid any interest on the underpayment of your taxes. And the employee's tax paid for September 2023 was 63,520. So that's also irrelevant now because that relates to the February 2024 year of assessment. So if we are going to make a third provisional payment, it will be based on that taxable or that actual taxable income for 2023, which is known by then, of 1,356,553. So we are required to calculate Tini's provisional tax liabilities for the 2023 year of assessment, and we must show the dates, and she does not want to pay any penalties or interest, but wants to pay the least amount of tax payable with each payment. Let's look at the solution. So the first provisional tax payment, that's due on or before 31 August 2022. So we'll use the estimated taxable income, and we are using the 2021 year of assessments taxable income, which was assessed on 31 January 2022, which is well before 31 August 2022. So the minimum requirement of 14 days has been met. So we'll use 1,050,732 Rand. Now we have to calculate the tax. And the normal tax per the tables is then 1,050,732 less 817,600 Rand, and the difference there is multiplied by 41%, and then we add 239,452 Rand, and we get a total of 335,036. And then we deduct the primary rebate, and for persons younger than 65 it's 16,425 which is deducted, and that leaves us with 318,611 Rand. And there were no medical tax credits yet because they did not contribute to the medical fund yet. And then we have to multiply it with 50% or divide it by 2 to get the payment for the first 6-month period, which gives us 159,306 Rand. And from there we deduct any employees tax or foreign taxes that were paid, and which was 125,783. And that leaves us with the first provisional tax payment of 33,523 Rand. Now we look at the second provisional tax payment that's due on or before 28 February 2023. And the estimated taxable income we have to determine, and as explained before, because the taxpayer now earns more than R1 million taxable income, we use that estimate that was provided of 1,108,638 Rand. Okay, we calculate the tax on that again per the tables, 1,108,638 less the 817,600, and the difference between that multiplied with 41% plus 239,452 Rand gives us 358,778. Then we have to deduct the primary rebate again, which is 16,425 Rand. And now the taxpayer has started contributing to a medical aid fund. So we can take the medical tax credits into account. So the Section 6A medical tax credit, it's 347 Rand for the first 2 dependents, and then thereafter 234 Rand each for the dependents after that. So for the 2 children it's 234 and 234 each. And all of those figures multiplied by 2 gives us a total of 2,324 Rand. That is the medical scheme fees tax credit, Section 6 capital A. Now the additional medical expense tax credit, Section 6 capital B, the calculation of that, it's the medical aid contributions, which were 10,889 Rand per month for January and February, so times 2 is 21,778 Rand, less 4 times the medical scheme fees tax credit, because this taxpayer is younger than 65 and there is no disability in one of the dependents. So it's multiplied by 4, 2,324 times 4 then gives us 9,296, which is deducted from the contributions, and we are left with 12,482. And this is further limited, and we have to calculate 7.5% of the taxable income of 1,108,638 Rand, and that's a figure of 83,148. So there is no excess that can be carried over, so there is no Section 6B rebate or credit. Then we deduct the employees tax and foreign taxes that was paid for the whole year, which was 263,659 it was given, and we deduct the first provisional tax payment from there, which was 33,523, and we left with a second provisional tax payment of 42,847 rand. Okay, now we're looking at the calculation of the third provisional tax payment that's due on or before 30 September 2023. So now we have to look what the actual taxable income was. And it was determined at the figure of 1,356,553. So we can see the second payment was based on 1,108,000. So this is more, so there will be additional tax to be paid. So now we calculate the tax again. It's 1,356,553 minus 817,600. The difference multiplied by 41% plus 239,452 gives us 460,423 rand. Now we deduct the rebate again of 16,425, and we deduct the medical tax credits again of 2,324 rand, and again we calculate the additional medical expense tax credit, the same steps as before. The contributions of 10,889 for 2 months is 21,778, less 4 times the medical tax credit gives you 9,296. So we're left with 12,482, less the limitation of 7.5% times the taxable income gives us 101,741. So there's no excess carried over, so no more deduction there. And then we deduct the employees tax again and foreign taxes, and we deduct the first provisional tax payment of 33,523 and the second provisional tax payment that was made of 42,847. And then now the third payment that was be paid is 101,645 in order to avoid any interest.